Wall Street was closed today for the holiday, but 2018 ended on a high note yesterday. However, the small gain did not really offset a really tough month for investors. The Dow dropped nearly 10% in December, the worst December since 1931. In all, the stock market had its worst year since 2008. I am joined now by financial expert Crystal Faulkner from Cincinnati Market Leader. I want to thank you for being here.
You're welcome.
And as we move into 2019, what should the investor be looking at, especially if that investor was kind of skittish through the month of December?
Well, Kristen, it's not unusual for people to be skittish when they see their investment values dropping. Significantly, exactly. Yeah. The key is to not let emotions take control of good judgment. And if you have a good financial plan in place, something that also considers your long-term and your short-term goals with the target allocation, then you should not panic. You just stick with the investment strategy and let the market go up and down and make sure that you have short-term cash needs available. That's the most important thing I think people need to think about.
When you say have short-term cash needs available, how much cash should you have available?
Well, generally speaking, it's any major cash need that you're going to have in the next year. So for example, if you have a college child that needs tuition payments, you may want to keep that money available in liquid assets like in a money market fund, because you don't want to have to sell investments when the market's tumbling and lock in that loss.
Yeah. 401ks. I know a lot of people are concerned about their 401ks because they lost a bit of value. So how should you be handling that? That's retirement.
It is. It absolutely is. Yeah. But again, the whole investment process, especially money in your 401ks and IRAs, is a very long-term process. It's decades. So what you need to do is make sure you have a good financial plan in place, one that considers your short-term and your long-term needs. Make sure the financial plan takes into consideration your own risk tolerance, your time horizon, and then your investment goals. And then when the market's down, or really any time that the market goes up or down in those large swings, take this as an opportunity to rebalance. I like to say when markets are down, how do we make lemonade out of lemons? Because usually it's a good time to buy. It's always a good time to sell when markets are high, but then buy when markets are low.
Sure. Not everything has performed poorly. Are there certain sectors that investors should be looking at that might be more profitable, especially moving into 2019?
Well, I will tell you, I think the key again is just making sure that you have the kind of investment balance between stocks and bonds for your own personal goals. What you find,
and your comfort level,
you have to sleep at night, right?
Yes.
So what's risk tolerant for you may not be risk tolerant for me. So it's really a very personalized individual situation.
All right. Any final words of advice before we end the interview?
No, other than there's nothing that looks to me like, I mean, we have some interest rate issues, we have some world issues, there's still some concerns out there, but Wall Street strategists and people who are very knowledgeable about this think 2019 could be a very good year.
All right, that's good to know. Crystal, thank you for giving us the tips and the insight. We really appreciate it.